Hello, 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 hello. Welcome back to our Friday appointment, the second of the week. Friday appointment where we're gonna see some blood because of our friend Bitcoin. Let me just go to charting. Okay, so we're gonna see what's happening. So we're gonna starting from the big picture, okay, from the monthly chart. Monthly chart is sitting on the 21 EMA support in this moment. Okay, so month still long to go, still a lot of time to go for the close. Weekly chart already broke down the EMA 55. There was the almost, well, Adam and Eve situation for this move here, and also in this moment doesn't have a local dominance, divergence, okay, and no divergence for the hidden, so the big picture one, also quite a big move. 3 hours is also lower low, 3 days also lower low, and under the EMA support. Okay, we're gonna check the hour levels after, but I want you to see this. So a close of the 3 days under the EMAs will most likely help us go and retest them. Okay, the retest of the 233 can be a run. Okay, so it's not that bad. The problem here is that we are going down and we don't have a local divergence. It means that we're gonna make a local divergence into another time frame. Okay, daily, same situation. Some people think that this is a bullish divergence. This is not. This is the last part with the valley. Okay, that's why I think Richard asked me about the valley. This is the valley. Okay, so you have this situation. Okay, and then you have a valley here. Okay, anyway, so it's not divergent. Okay, 12 hour, same situation, but if the daily usually is the same. 6 hours, same situation, lower low, lower low. Okay, and we can go on the small time frame, and we're gonna find a small divergence, probably on the last move down here on the 1 hour. Okay, probably, because if this goes down quite more, this is gonna be destroyed again. Okay, now let's go on the reason for this. The reason also for the acceleration. The reason for the acceleration we can find with candles, and I'm gonna start with the 3 hour candle, 4 hour, 3 hour. Okay, no need any more of this. Also EMAs, not need. Okay, so let's focus on some levels. Okay, if you don't remember, I remember. This was the weekly divergence, bearish divergence. I'm gonna use the wicks for this. Okay, weekly divergence have two main levels. Okay, the two main levels of the weekly divergence are the 161, the 261. I'm not thinking on a 361. I'm not thinking, because 361 is exactly $700. Okay, probably is where we started the big move, but don't even look at this. Okay, because this is not our gameplay. The gameplay is still the one that we checked last time. So I'm gonna set a pair of boxes, yeah, one, we are under it. This is one of the reason. Okay, one of the reason of the fast drop. Okay, and two here. Okay, so these are two levels coming from a big time frame. Okay, then this is the last known divergence we had. Okay, last known divergence we had on the weekly. Then we had this pump, this fantastic pump, that will bring us back to the downtrend channel, to the top of the downtrend channel. And I'm gonna check this on the daily. In this particular case, the chart of Phoenix is not that different from the Max one, and since what drives the market is the leverage, we're gonna just sit on this one. Okay, for the moment. So this is what happened. No, you went down there, not completed. You did not complete this, you can see. Okay, and you pumped, because here is where algorithm placed the order last time. They placed the order because this is the 161 of this. Okay, of this divergence, the weekly one. So going inside it, you start filling order until you reach it a support, and algo changed the direction. Okay, back to the border, blah blah blah, and here too we had a bearish divergence. Okay, so now we have the price will move based on last known bearish divergence. Okay, that is this one. Last known bearish divergence on the big time frame is the weekly one. This is the one applied on the 3-hour, 4-hour. Okay, so we have one that was the support. Okay, we went there 100%. Two that was contained inside the old 161. So here also we had a lot of chances to change direction for this reason. Okay, so two different levels on the same zone. Last box, the third box is this one, and I'm gonna make it bigger because we have to check. And there is also the last super extended box, that is this one here, but most likely is not gonna happen. Okay, so this can happen because you have the border here and because you are closing under the other one. So how the move is working, the move goes down under the level. Okay, you can see is retesting it right away, finish filling the short, down again. It happened with the 50. Okay, this can be wrong by a few dollars, but it happened with the 50. So you break down the 50, retest the 50. Now it just break down the fib zone. Okay, when you close under a fib zone, it's a continuation point. Okay, retested the fib zone and created this other flag that already have a little bit of divergence. That's why he's trying to pump back in. Okay, but a retest of this and a close under of this, it most likely gonna drive you to the next one. Okay, the next one cannot be here because we have, well, it can be here, but it will be not better here because we have the border. The next touch is visible around here. So if we want to exactly use mathematics for this, it have to go down here when the level is available. So look at me. 30 minutes. See, you know, bam, bam. Okay, this is this. Went there, created a little bit of divergence. You can see. Okay. Now, if we close the candle with divergence, you can continue retest the up zone. Okay. Instead, if this now pump and goes back over there, removing the divergence from the chart, then you're gonna have more move down, but most likely more move down because you actually close it under the level you had to go. Okay, so the price on the 1 hour closed under, on the 3 hour closed under. Okay, this was the important close of today. So this is what is pumping this now. This is the 1 hour one. Okay, not visible in any order. So even if this pump cannot be strong to get back in the path yet, okay, not with this one, you need a bigger one. Okay, so this need to close here, for example, with divergence, then it's gonna be a strong move down, a strong move up, okay, to go back up there. But let's go back to our charting. So we have a 361 here, most likely because we failed this one for the bounce at the 50. Okay, bounce at the 50 to not go bounce at the 50 will probably a lower dominance on the market, will most likely cause also a pump on the altcoin. Not to forget that meanwhile Bitcoin is crashing, we had during the crash we had also 3-4 altcoin that had also take profit zone. Okay, so it's something that is not affecting completely all the altcoins, because some of the altcoins have interest by the market, and the volume that they are accumulating is bigger maybe than the volume of selling that Bitcoin causes on altcoin in this moment. Okay, but anyway, being very bearish, let's say, because we can play this move. So bearish my ass. This is the move. Okay, this is the different channel that we have. We already show this last time. We can even put just the line, okay, for the triangle, remembering that if it's a triangle, you can still play the move down with a short. Okay, so if this is a triangle, there is this situation. It can be a better situation. Yeah, it's me very bad today on design. Okay, the lower border, that is also this line here, something like this. So let's put it exactly like is the line, the trend line. Okay, the lower border is exactly in this zone, that is 461, based on this move. No, a 461 usually is the price cannot go under that. Okay, the last move is touched. The 261 of the weekly is just under it. Okay, and if you calculate this without the wicks, this can be also here, can be. So in a very bearish move, okay, but bearish my ass, this is the area that interests us for the moment, is the 4,800. Okay, is this channel in a very bearish move, understanding that here we must develop in one of the bigger time frame, probably. I think is gonna be the weekly one. Okay, monthly can't develop it, probably. Okay, cannot develop it. It can be the weekly one. In the weekly one, we need to develop at least an hidden bullish divergence. I think monthly can happen. Let me just measure it. This is the live situation. 8 bars. Cool. Weekly have. So from the beginning to here, 42. I prefer the monthly one. Okay, so in case we will develop here hidden bullish divergence, so this is gonna be lower low, this is gonna be higher low in this area, and hidden bullish divergence do at least 161, and like we said last time, it will help us. Let's say it's gonna go here. It will help us project this 161 as a double top. Okay, but understanding that if this is a pennant, then this is the target. So a 261 on this zone, 28, 29, let's say 29. 28 is good, 28. So we have this possibility, okay? And the possibility will be most likely before the halving. So before the halving, no matter what happens in geopolitical situation, they will try to have a bounce that put the price over there. Now, last time we bounced, but we had a different story here. Okay, last time we bounced, we had a big divergence here that brings us exactly here. Okay, we had this divergence here. Okay, it need to be oversold. That brings us here, exactly here, and this was last move up. Okay, top, then creation of a new ABCDE correction, and then one another. Okay, so there's gonna be different possibilities here. First of all is this one, this level here. Okay, that is under the 361 that I will not like to cross, because last time we crossed the sell pressure become very big, but anyway you need a very big sell pressure to go from here to here, but it was very big, and there was a total crash of the market in this zone. Okay, so this need to go down slowly, not like this. Okay, anyway, we're gonna have here alerts on the group telling us this not gonna hold because nobody have this in this chart. This gonna hold at least a little bit because of the algorithm finding their 361, and every time we have a 361, you know, we pump back. Okay, it was here, that was here going down. Okay, so every time we have a 361, we have a algorithm change direction and pump. Okay, so it's not gonna be like a drop like this, I hope. Okay, then if, remember, you can touch this and just go. Okay, what I don't see here, but I did not see anything here too, is a very good divergence like we need. Okay, so developing a divergence on a small time frame, you know, it doesn't bring us out of this one like here. Okay, it doesn't bring us out of this one, and having not a divergence on a big time frame like a daily one, for example, we don't have. You still have to close. Okay, but we don't have it for the moment. It will most likely not help us too much until we don't reach one of those crash and fuck off candle situation. Okay, so this is the controlled one. Okay, controlled one. There is also another thing. Okay, that is something that I want you to see. Okay, so I need to change on the weekly. Okay. Okay, so this was looking even on the monthly. Now on the monthly we just have the drop. You just have the drop here. Every time we touch this line, this linear down, we have the drop. There is also another theory that I never posted here, that with a reason why, because it's like terrific, and is one that actually expose a different level, okay, in the literature, also called the megaphone. So if this is not the true channel, but it's gonna be, well, at least till here is gonna be, okay. Then we're gonna check what is on the plate. We also have this guy here, okay, that I call it the megaphone some time ago. And to be honest, we can design also this way to be a megaphone. 1 and 2. Okay. Okay, the megaphone. What is the megaphone? A megaphone is another structure, okay, that expand the levels up and down. Okay, so you don't have a channel, fixed channel, you have a different channel, okay, that is expanding every time. So expanding create bigger swings create lot of money, okay. Why this is bad? Not because you go down, okay, but because in the case of a megaphone, and I don't think we're gonna find it this way. Yeah, it's impossible this way. We're gonna keep the divergence one that is coming from the weekly. That is this one. Don't rely on this. It's just a theory. Okay, it is based on pure mathematics. Not market structure, nothing. And I know mathematics work, but it was an idea I had some time ago. When we have the top, I never posted to not influence minds. Like, you know, I don't need actually to influence any mind. Okay. The megaphone. So the megaphone contains the 361 structure that is like this in the reality. Okay. Is like this. The 361 is the regular blending zone for a bearish divergence. The 361 is on the border, okay. But what here is not helping, that is not the price, is the time to develop. It means that to develop this, we need on a linear basis at least 266 days. And there is one bad thing on this particular design, that if you go down there, okay, and will probably sell all my family, people I know, friends, okay, on the black market to just buy Bitcoin. When we long from the 361, apart that we're gonna need something big, okay, but when we long from the 361, we're gonna then probably not be able to get back in the uptrend channel again, because this now is an uptrend channel, okay. Also it can be that this is another point of view, the very, very bad point of view, or the very, very good point of view, because a short like this and a long like this probably gonna make me retire finally from this or anything, okay. There is another point of view that I saw on some people in the internet around. They are calling this to be a bear flag. No, you remember the same people was calling this a triangle, okay. This is literally a pennant, okay, but we can also watch this like this. So let's just have all the point of view today that the market is this low, okay. This was last known season, okay. This was last known season. This was the 2017 season. Same zone where I start to go for my triangle, okay, for my pennant. There is a possibility that we did the 100, we did already the 50, okay, we bounce here, and here this is gonna be something that we're gonna explore in the next months. We're gonna probably go down here, bounce, and do a retest of the 25%. This is the 50%, this is the 25%, okay? And then we can go down, understanding that a 161 of this is 0, okay? Is no, I don't have the measure for this. You can't. This is impossible. Okay, so this cannot be possible. What can be possible is to break down after the test, and let's make this as case and go here, because if you do at least the last 161, you're gonna go around here. This I remember was bigger. Anyway, and this is the 361 of this also. If you don't go up higher compared to this one, you are still under the influence of the divergence. So in a very bearish situation, we can also be in developing this one. Okay? Why I don't care, to be honest, of this being a bear flag. Because bear flag doesn't develop on the pump, for example. Okay, this can be a downtrend channel, of course, that goes here first, then retest, and then go down. Yes, totally. Okay, so it's more you can configure this more on the megaphone situation, even if is not gonna be, okay, because miners will never let the price goes there, okay. It's possible. So what is our enemy if we are bulltards? Okay, if you are traders, there's no enemy here. The only enemy here is the reach of a 361, where you have to close the short position before, because the pump can be happening very soon, so you will be burning your money for nothing. Okay, what is our enemy? Our enemy is the possibility to go under this level. Okay, I remember I show you this last time. Today we have a lot of time, so it's not gonna be a fast session. This is our box. You can see that there is no coincidence in the market. Okay, they don't exist. Mathematics is there to help. Okay, this is also this support. Okay, so in a move down to the border, you're gonna have the 461, end of the drop. No, it cannot go under that. You're gonna have this old box providing you support here and here, but most likely here. So this is also something that we can trust because of the old measurements. Okay, and you see that as soon as we get back in, we had this pump because it's a big accumulation of orders. Okay, so probably the maximum drop we can have is this one. Okay, here I have 1, 2, 3, 4. So here can be that we stop. It will configure us more for a pennant than for the rest. The pennant minimum extension will be, in that case, let's do this, okay, 18,000, okay, but let's just try also this one. Yeah, 15,000, 16,000, something like that, okay, on the close. Instead, the big development of this, okay, gonna be probably 28,000. Okay, so there's a 10,000 difference. Okay, and it will depends on how the miners gonna work the play. Okay, they own a big stack of Bitcoin. They don't want to lose money because they invested a shitload of money on that mining rigs, and most likely they will want to exit a bit the position they have before the halving. So it's something that's gonna happen very soon. Let's go and check our friend dominance today. 4 hours, 6 hours, okay. Is trying to keep this level, okay, most likely because as soon as Bitcoin started crash, the pressure, the sell pressure on altcoin increased, and so this can now reverse, okay. Reversing means that more control on altcoins. What we don't want is for this to go up back there, because we want to play still some altcoin versus Bitcoin. Let's go now on some of the setups that worked. Yeah, they worked already, so we don't care. Okay, so this was yesterday. I remember I put the exit on the board there. Okay, you always can be able to play the wall box, but it's better to concentrate on exit strategy, scaling around here to here. Here you can see there is not any more liquidity. That's the reason why you drop already. And now that the people changed their mind, okay, because probably they saw this, okay, price is retracing. Half because of the effect coming from Bitcoin, half because people changed the direction. Okay, others interesting. Okay, don't like XRP, so I'm not gonna check it. BNB even broke down the wedge. Okay, the idea was that the price stopped in this zone. Okay, broke down the wedge, probably for a retesting of this area. Okay, at this point, and then to go back to the wedge situation. Okay, this is caused most likely from Bitcoin. People took profit exactly in the zone, okay, and then they let this goes down. Remember that now you have also margin trading on BNB, so it's gonna be more fun than usual. Okay, another important chart to check is Ethereum. Guru posted the wedge, so credit to my boy. This is the channel. Okay, price was not able to cross the last short zone. That is this one. Okay, that is this one here. And so he went back and retested the short zone, and now is retracing, probably to go back on this zone, or let's just try and understand. 261 here bullish even, and this is not. Okay, so here still bullish. Okay, here not really, because you are also under the 50%. Okay, also here we can play margin, remembering that margin is better to be played versus BTC or versus US dollar or USDT. Other important thing to check here. 1 second. Oh yeah, one other reason that can be pushing down our coins is the recent slide on Dow Jones. You can see Ethereum, okay, and Dow Jones have almost same structure. Okay, almost same structure. Okay, here we have the reach of this 161 already, so the sell zone already reached completely. Lot of traders on stocks play the close, so we can play this one here, and you can see that you went exactly 161. Okay, you went there, and now it's retracing, because every time you reach a 161 you're gonna retrace a bit. Retracing a bit, it will push down not only stock market but also Bitcoin, because the same people that are putting money on stocks are putting money also on Bitcoin. So that's quite normal that we have a reaction like that. So let's go back to our chart. I was waiting for this to do something, so we can also check in real time. 30 minutes ago, look, went 161 and stopped. Did not make fuck off candles, most likely because it's under this. We are far from the opening of New York City that opened this way. Okay, it opened under the fib zone, so the algorithm are not telling too long. Okay, the close over the box or inside the box to change direction is a long. The close under the box is a short. Okay, so this is not ready yet to change direction, and most likely gonna go down to the border. Down to the border is at least a 261. Okay, it have bullish divergence closing in 12 minutes with bullish divergence. The bullish divergence can, let's say we close here, can go at least 161, and this way, even if we go 361, okay, it will be a retest of the 50. The 50, 361 reject down. Okay, in case of this, let's say this is the reaction of a bullish divergence. The maximum reaction you can have 361 usually is also the 50%, not by case is the 50%. We're gonna also add here the EMAs. Is gonna need on the 1 hour to reach back the EMA 55 or 50. Okay, and as you know, this is not very easy if you close under the box. Okay, the box now is hard resistance. Okay, so it's not gonna be easy. I closed my short when I communicate to the group because this was an important level. So I was thinking that actually this can bounce here to go and retest. It did not do it yet. We can still make a hammer here, okay? But if we do an hammer in the 10 minutes, then we're gonna avoid the bullish divergence, and then we're gonna go down. So it's better to close here. Okay, it's better to close here. This is what happens every time. So you have a bullish divergence visible. You think it's gonna close the bullish divergence. You don't know yet because you're gonna wait. You need to wait the close of the candle. The close of the candle for the moment is bull. Okay. What will change? The last 5 minutes, 2 minutes, this can change. Okay. So we're gonna have to wait at least the close of the 1 hour to understand what's going on. For the moment, since we went under the box, this is not bullish. Okay, for the moment. I would like to see, it's 3 hour closing also, that have no divergence at all. I would like to see the close of 3 hours that have no divergence, the close of 4 hours that still have 1 hour down, to see where this will close. Anyway, also the 4 hour have no divergence for the moment. Okay, this is all for today. I'm gonna be also around tomorrow. Okay, Sunday, you know, I travel for the a blockchain event for the BCA, European Central Bank. And I'm gonna report to all of you on a video to see if there is something interesting coming out from the space. Thank you very much, guys. Yeah, sorry. Before this, we need, I promise you I will have to explain you a little bit on divergence. So what are divergence for dummies? Okay, divergence are not, we're gonna do it here again, okay? So let's put here a box white, let's put here a box blue, and understand the divergence. So let's say that your price is going up, okay? The price is going up. You will find a resistance. This is basic support and resistance. You will try once, fail, try twice, okay? If in the try twice you have the indicator going down, this is a regular. This will become probably a regular bearish divergence. Regular bearish divergence goes down 361, 461, even. Okay. Same. This is what make the trend change. Okay. Regular divergence do have a possibility to change the trend. Price will go down. See, it's gonna go here. It's gonna it's gonna bounce. Okay, make maybe a bear flag. The bear flag will develop here bullish divergence, and you're gonna buy at least 361, 461. Okay, so this is what's happening. Hidden bearish divergence, hidden bullish divergence cannot change the trend. First of all, they cannot change the trend, so they are not very powerful. They go at least 161, so you cannot play big on move like that, okay? Also, they can be fucked up very easy, okay? So since they are not powerful, they can be completely fucked up, and they depends on the trend. Into an uptrend channel, you're gonna have regular bearish divergence on the into an uptrend channel. You're gonna have regular bearish divergence on the top of the channel, and you're gonna have hidden bullish divergence on the bottom of the channel. In a downtrend channel, you're gonna have regular bullish divergence on the bottom, okay, and hidden bearish divergence on the top, okay. Of course, you can build up also here bearish divergence because you have something like this, but most likely when you have a downtrend channel, this is a hidden bearish divergence because a continuation of the trend, and this is a regular bullish divergence, okay. Remember, you have to wait till the close of the candle to estimate the divergence until you're not trained on it. When you have an important fib and at least 3 hour, 4 hour, or 6 hour divergence on that fib, preparing, so the candle is not yet closed, you can even enter the trade because most likely it's gonna happen. A lot of time we get fucked up on that because we check a very small time frame, okay, and at the close of the 30 minutes there is maybe another 1 hour and a half on the 3 hour, so that's not gonna be very important in terms of extension up or down, okay. Now, ciao everybody, ciao.